Welcome back to another episode. Today, we're just going to take a quick look at the overall markets and two earnings that just reported that I believe are driving the overall market right now. Obviously, we do have a Fed meeting later today, so things can change, but Microsoft right now is up about 3.6%. And this is, I believe, the main reason stock prices are up. This is a $2.2 trillion market cap company. The second one is Texas Instrument. This one's up about 4%, and this is a market cap of about 167 billion. But I do believe they presented great news for the overall semiconductor market. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So first, let's just jump into Microsoft. I just want to do a quick overview. I really want to focus in the semiconductor industry. That's where my main focus is. But we can see Microsoft for the quarter reported revenue of 51.7 billion, an increase of 20%. That is insane. Two cool things that I thought were pretty cool was first, tech is increasing as a percentage of global GDP, so that's great news for the overall tech industry. The second thing is they continue to see strong growth in the clouding market, and that I believe is great news for overall the semiconductor industry and the tech industry, right? Companies are still focusing pretty heavy in cloud and improving their overall solutions. So like I mentioned, Microsoft's super strong, but I really want to focus on Texas Instrument. And here I kind of had this presentation of their overview. It's a super quick overview. First, we can see Texas Instrument Q4 revenue was 4.83 billion. That was up almost 20%, 19% year over year, driven by strong demand in the auto and industrial industry, which I think is pretty good. Cash flow from operations were $8.8 billion for the year, and free cash flow was 6.3 billion. So this is a money-making machine. Free cash flow is roughly 34% of revenue. So those are some great margins. For 2021, they returned about $4.4 billion to investors in forms of dividends and buybacks. So this is a company giving straight most of their money back to investors. For Q1 outlook, they expect revenue to be somewhere between 4.5 to 4.9 billion. I honestly think that's a huge range. So I'm guessing they believe the market can go anywhere. So some kind of highlights for Texas Instrument. Cash and short-term investments are roughly 9.7 billion. They have long-term debt at about 7.2 billion. Remember, this is a company with super high cash flow margins. So even though they have high debt, they still have high cash, and they also have high cash flow margins. Let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Our revenue breakdown for the full year of 2021. Industrial made up 41% of total revenue, automotive made up 21%, electronics made up 24%, communications equipment made up 6%, enterprise systems made up 6%, others, which usually include their calculators, made up about 2%. But we can see two big markets are the industrial and automotive. Those make up about 62% of total revenue. This is the market Texas Instrument is focusing, and that's very impressive. I'll talk a little bit about that in a bit. One final thing that they mentioned is they are increasing their internal manufacturing capacity as they're seeing still huge demand for their chips. So things to focus. Right now, Texan mentioned they're heavily focused on industrial and automotive. These are some strong growth markets, as both the industrial market and the automotive markets are kind of doing this revolutionary trend in technology where they're trying to become smarter, safer, and more connected products, right? We're getting more smarter vehicles, equipment in industrials, right? We're hitting the automation. Things need to be connected. Things need to be smarter and safer. So I do believe those are two smart markets that Texas Instrument is focusing on. One thing that I do want to mention is they do believe that this imbalance of demand and supply will end soon in the semiconductor industry, especially for the markets that they're hitting. And that might seem a bit scary, right? I do believe this is what a lot of investors are worrying that, hey, eventually, right now, demand is so much higher than supply. So these chips are just selling like crazy. Texas Instrument believes that this will end eventually, and I think most of the market believes this is going to end. The semiconductor industry is usually a very cyclical market. What they do kind of say is, though, even though this imbalance is going to end, they believe the overall growth for semiconductor chips are still going to be in a high trend till 2025 and beyond that. So maybe supply and demand might not be as crazy as it is now, but demand will still be high and the growth needed as more chips are needed, for example, for industrial products, for automobile products, that they are continuing to innovate in that manufacturing capacity that we saw. So I think it is great news for the overall semiconductor industry, but maybe some of these semiconductor stocks may be a little bit overvalued to some extent or possess the risk of high valuations. Regardless, I do believe in the long terms, this is my favorite market. Let me just mention, for me, I do not own any shares of Texas Instrument, but if we take a quick look at price action, I do believe if I wanted to enter, this would be a tier 2 stock, and it would do more of like a mid to dollar cost averaging, right? This is a company, high return to shareholders, high positive cash flow from operations and free cash flow, and is growing in a strong market. So overall, a strong company. In terms of fundamentals, right? If we take a look at EV to EBITDA forward ratio, it's not looking expensive, even though the stock price is up a nice amount. Texas doesn't look that expensive. So to me, I really do enjoy Texas Instrument. If I want to enter in this market, I think Texas Instrument would make one of my top lists. But right now, I'm really focusing on some of just my big players. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.